With the laundry list of variables that people say are needed to succeed in trading, is being consistent often overrated? From having sound money management that respects the expectancy of your trading system to having a trading plan, there are many things to consider. Getting consistent trading results in a market where there are many participants can be difficult at times, but it can happen, and it does when you implement your trading edge exactly how you tested it. So in that sentence, is the answer to the question, is consistency in trading overrated? So to be clear, that statement is made with the expectation that your trading strategy and your plan has an actual edge in the market. You can only know if you have an edge if you've actually tested and proven the strategy to be so. And the problem is that it's potentially easy to fall into the trap of trading without a well-defined strategy. The markets are moving, right? And if they're moving, then surely you can just catch some of that movement by just watching them and jumping in when they look good, right? Well, maybe you can. But if, like most, read all of us, you don't make money on every single trade you take, you're going to want to know why you lose when you do, even if you're overall profitable. So what? Well, you probably don't keep a trade journal if your strategy is vague, so you go to your fills window or even your statement. And you try to pick through your trades, but there's no clear pattern to them. A trade here because you felt one way on this day, a trade there because the market was breaking higher another day. Without going through each and every trade and replaying them individually in your mind, how can you expect to get any information that's of practical use? It's much easier to test performance and identify the weakness of an approach if it's well-defined and accurate records or journals are kept. And the only way your records will be accurate is if you were consistent in everything you did in trading. So the fact that you're getting steady results is something that you can lean on to improve your strategy. Over time, you should be able to either make the necessary adjustments to turn the strategy into a consistently profitable one, or work out whether it's better just to move on to something different. And this really is the most important aspect of having a consistent approach. Working in this way may mean that you're not always going to get things 100% right. And this is something you should not expect anyways. But what it does give you is a solid reference point and a foundation to build on. It allows you to repeatedly practice the same routines over and over again in a similar way a golfer may swing their club or a chef might make their specialty dish. It may not be exactly the same each time, but they become so familiar with the procedure and the variables that are involved that in the end, they are able to execute their plan and achieve the particular goal with far greater accuracy. They are much better prepared to make minor adjustments during execution in order to account for those slight differences and possible problems with their plans when it becomes much clearer to them. And it's not unusual for traders who, for example, after seeing a market rally for days, all of a sudden switch from fading a ranging market to being a trend trader. They don't want to miss out on what looks like a fantastic movement. Hang on, I hear you say, isn't that a good thing? Well, number one, knowing a strategy and its nuances within a particular market can make a huge difference to your bottom line. So switching up to something different without having thoroughly practiced it can spell danger. And number two, the chances are good that at some point the trend will end and you're going to be left holding the can. Markets move from balance to imbalance and back to balance again in various manners. So if you want to trade trends in addition to trading range extremes, it'd be far better to have a strategy for both and identify when to use each of them. At the very least, if you stick to your range trading strategy and the market starts to trend, you need to identify this and hold back on trading it until the market moves back to the range mode. And while most know they need a trading plan, it is virtually assured that most do not have one. And we see it here at Netpicks when new traders come and we speak about their previous trading. But without a plan, how can you even attempt to be consistent? Well, you can't. Once a trading plan has shown itself to be effective, you must not add any untested variable to muddy the waters. And this includes a gut feel to skip a trade that fits your trading criteria. It also includes not taking a loss when your trading system says that the trade's not working. A stop loss that is properly placed is not a suggestion to exit the market. It's a rule. And once your losses no longer fit the parameters set out in your plan and are larger, well, you've just skewed your trading system and you are on the road to a damaged trading account. Well, what about switching instruments that you're trading? Well, I think that your trading strategy should be robust enough to handle most liquid markets. And while markets may move differently, there are some mechanics of the market that are repeatable regardless of which one you trade. Markets trend on occasion, extended markets often mean revert, and markets consolidate. Basing your trading strategy around those mechanics keeps you in line with how price advances and declines on a chart. Yes, simple does actually work in trading. Trading is more than just looking for trading signals and banking profits. It's about how you go about the business of trading. And I think it's clear that going on in the business in a consistent manner is vital to becoming a professional trader. The sooner a trader recognizes this, the sooner they become a trader. If you could honestly say that your routine, your preparation, your strategy, and your research are all pretty much uniform, well, your results will largely be consistent as well.